Is Tesla's stock going to crash to $90? Because we detected 20,000 put options being bought at the $90 strike price and 18,000 on the 95 strike price for August 25 expiration in 13 days. In this video, we'll explain why we think someone bought these 90 strike put options. So let's take a deeper look at what's going on. When we take a look at the options time in sales and we filter out for the August 25s, you can see now what was going on. We see a lot of these 95 strike puts, 90 strike puts, 95 strike puts. They were paying $1 for each one. So each of these contracts was about $1. Okay, even the 95 strikes, right? And that's why they chose this delta of 0. Okay, so when we take a look now, we know then that the value of this purchase was about 20,000 for the 90 strikes and 18,000 for the 95 strike. So roughly $38,000. And why were they doing that? So let's analyze this trade. You can see here that on the profit loss graph, this Tesla stock has to move right now from 241 all the way to $90 here before this blue line starts to increase to become profitable. Okay, the purple line reflects this current date, so it actually becomes profitable sooner. That's why you could see the purple line going up sooner as we approach these prices here at 140, 130. It starts to become profitable sooner because of the time decay when you buy put options. Okay, when we take a look at the Greeks, you could see very, very small amounts. It's also because each of these put options were only $1. Okay, so why are they doing this is the question, right? Because the probability of something happening, dropping below $9, if we move this line to find that probability, you could see here it is 0%. Then that's why the delta is 0, right? So even if we move it all the way here around this level where we start to see that purple line come up, this is still 0.3% probability of happening. Okay, so why are they doing this? This is what we think is happening. If we take a look at Tesla stock chart, this is a year. Notice on the bottom here where we have the implied volatility plotted. We'll expand this so you can see more clearly. At the start of the year, Tesla's implied volatility was all the way here about 100%, right? And ever since then, it's coming down and coming down. At one point, it was up here. This here, you could see the percentage here, was about 50% on June 21. On earnings, this is earnings around July 19, you see the implied volatility about 32% here, right? Right here. And now, where are we? Implied volatility is all the way down to nearly 0%. So look at that. Implied volatility is at its lowest Tesla's ever been for this 52 weeks, this 1 year, right? Very, very low implied volatility for Tesla. We can see that also here at the option statistics, 0% current IV percentile. Okay. Had a lot of volume actually on yesterday, August 11, when these put options were being bought because of these. Okay. Now, what's going on? So why is volatility so important? Well, if we take a look at this graph, the volatility here, where we can adjust this, if the volatility increases to 32%, for example, when earnings was, we can see where the profit would be. Look at the profit right now. It says $3.45. Well, if they are making $3.45, and this is just where Tesla is trading at, 241. Let's just assume it doesn't move, so they're profitable by about $3.44. $3.44. Their initial investment per contract was only $1, right? So you divide it by the initial investment, $1 times 100, that's 344% gain. So this is a trade based on volatility. If this volatility, let's say it only increases to 20%, the profit is $1.23. That's still 123% profit, as we just showed that calculation. And so let's say Tesla goes down a little bit more. And now we're at 300% when Tesla is at 226, for example. Right? So this is a volatility play here. Taking advantage of the zero implied volatility IV percentile that Tesla is currently at. So it does not necessarily mean that Tesla has to drop all the way to $90 for this trade to be profitable. Okay, so this is what how you can profit with options if you understand how to use volatility to your advantage. And that is how we structure our trades. When we have strategies, when we trade stocks that we share with our members, and our strategies, we use volatility as a way to guide us in constructing our strategies so we can create the right risk to reward ratio to maximize our profits. So if you are interested in other stocks that have unusual options activity other than Tesla or other of the more popular stocks where the data is more clear, because we get more clear data when not a lot of people are trading it. When just a few of these large investors trade it, we get very clear data. And if you're interested in that to maximize your profitability, I encourage you to join our membership. Click the join button on our channel homepage to learn more. You can get access to different stock picks where we go long or we go short, or you can also get access to our option strategies if you trade options. Okay. All right, well, that's it. That's what we think about Tesla. Comment below on what you think. Do you think Tesla will drop to $90 by August 25? Or do you agree that this is a volatility play? Or maybe you have another idea why they bought the 90 strike puts. Let us know in the comments below. Thank you, everyone, for supporting this channel, and wish everybody a wonderful weekend. Take care.